Welcome to Financial Garden Live, where we plant financial seeds every week so you can grow in our 6 areas of focus. Emotions and money, entrepreneurship, budgeting, banking, debt fundamentals, and investing. I'm your host, Tasha Danielle. Let's dig in. Hi, everyone. Welcome to Financial Garden Live. I'm your host, Tasha Danielle, and I'm so excited to have a special guest with me, Atiya Brown. She is a CPA, a CA, and a CFEI. You know, I'm playing alphabet soup right now, but basically that means she's about her business and she knows she's very knowledgeable in the space of finance and specifically accounting. She has over 15 years of financial as a financial expert and 11 years, give or take a little bit more, of experience as a CPA and a CA. And she is the founder of the Savvy Accountant, which is why I wanted to bring her on. And she also has another business called Get Made Savvy. And she has just been crushing it lately. She's been getting all this shine in notable publications. And she knows all about taxes. And the Savvy Accountant focuses on real estate taxes, but she also focuses on other small business with tax preparation and planning. And one of her biggest things that she noted on her Instagram this year was that she saved a client over $250,000, I believe, in taxes. So she knows her stuff. So I'm so glad to have you on and welcome.
Thank you so much. That was a great intro. Thanks for having me.
Thank you. You're welcome. So how did you end up starting with the Savvy Accountant?
So I started the Savvy Accountant about almost 3 years ago. So I guess to bring it back, so I started my whole financial journey in about 2017. So try to make this really quick. So I'm the eldest of 5. And my baby sister came to us. She had a family meeting and she got accepted to med school. And we were all super excited, as you can imagine. But I take my role as the eldest really seriously. And it hit me that I had no financial help to offer her. And that was really hurtful because I had a great job. I had a great career. We had dual income. My husband has a really great job. But me with my finances, I had nothing to show for it. So I had retirement accounts at work and I thought I was doing great, but my credit cards were maxed out. I didn't have any debt collectors calling me because I would pay the minimum. And, I was like, oh, that's what you're supposed to do. And I realized that I had no savings. And so that's what jump started my financial health journey. And that was like in January of 2017, I believe it was. And then July, I remember clearly because it was 7-Eleven, I got laid off from my job. So my great paying job, I got laid off.
Wow.
And so that's where the Savvy Accountant was born. So yeah, I didn't start out to have my own business. I thought I was going to just climb the corporate ladder, have that corner office and do all of that stuff. But yeah, God had other plans for me. So that's how Savvy Accountant started.
Got you. I like that you are transparent in that story because I often share my money journey and paying off debt, and people are like, "You're a CPA, you don't really understand what it's like to not be well with money or know what it's like to have financial struggle." And I'm like, everybody has a money story, right?
Exactly.
And I'm like, and I tell people all the time, especially parents who don't want to talk to their kids about money because they feel like they're not an expert. I'm like, the gurus that you see and the experts, 9 times out of 10, they learn from the school of hard knocks, even
Yep.
if they, have the certifications and everything. So again, thank you for sharing, being transparent in that story.
No problem.
So let's talk about taxes and what you do when you work with small business owners. So I know that you we are friends on Facebook, and we actually met at FinCon. So I met you in person a couple years ago, and I know that you do. People think CPA with me that I love taxes. I'm like, no, there's so many different levels to being a CPA in taxes. I know general knowledge. I probably know more than the average person. I shortchange myself on it, but I just don't like. I don't love it like right? So for you, I want to bring you on and talk about some of the common mistakes that you see business owners make before they come knocking, or I guess clicking at your website to say, help me. What are some of let's talk about those 5 things that people that you see all the time that are making these mistakes before you get them on the right track. So what's one of the first things a common mistake that you see?
So I think a common mistake starts with organization, and people aren't organized. And so when it comes to numbers and taxes and accounting and your financials, people just aren't organized. So it's hard to keep everything together. And then that's going to just start the avalanche of everything going wrong. So organization is the thing that I think a lot of people have to work on. And they don't realize that once they get that together, that a lot of things with the financials are going to come together. So organization is definitely what I think people need to understand, that needs to be taken care of. And not numbers aren't for everybody. A lot of people are great at their zone of genius, but numbers isn't it. And so they just need to basically know that and be able to work with somebody who's going to get them organized, somebody who's going to let them do what they're great at, and then they're going to manage the other part so that they can stay organized. So that's the number one thing. And out of that funnels so many things. So if I just want to go into the next thing, organization is going to come from commingling. So one of the main things that people don't have a grasp on when they start their small business is that they shouldn't be commingling their funds. And what that means essentially is that the person and the business, they haven't separated with what to do with money. So you make money and then you're spending it on the personal stuff. You're taking your personal card and paying for stuff for the business, and vice versa, and paying for personal things from the business account. And so that's definitely a mistake that a lot of small business owners do. And so that I see that all the time. And I definitely try to tell people, as soon as you start, try to just start spending money only from your business account when it has to do with the business.
Okay. And so I know commingling, because that's one of the first things I say when people are asking me like to help them or give them some type of perspective. I'm always like, do you have a business account? Yeah. People are like, they just think like I'm, getting income coming in, I'll get it together one day. So organization is key.
Yep.
What about I'm just gonna throw this out here. I know this was one of your number one mistakes, but I'm just gonna jump ahead because hiring kids as employees, right? So I always tell people, yes, you can hire your children as employees, but when it comes to that specific thing, what do people do wrong with that?
So a lot of people think that it just means that your children could do anything in the business. And I've seen crazy things online about, hiring your children and putting them in the business for doing chores. So making their bed, those aren't things that are going to be valid deductions. And you're not going to be able to deduct those in your business as valid expenses, because that has nothing to do with your business. That has to do with your household. That has to do with you teaching your children to do their chores and stuff. And you can definitely pay them an allowance for that. But that is not what it means when we talk about hiring your children as a tax strategy. And that's a very hefty tax strategy that a lot of people don't realize exist, and they don't realize that they can benefit from it. But you definitely have to do it the right way. And so hiring your children to do their chores and thinking that you can pay them to do their chores, that's not what we mean. We mean for a legitimate business expense. So you can have your children filing, you can have your children running your social media, depending on how old your kids are, with your prints, taking pictures. There's a lot of things they can do in your business, and you can pay them legitimately, but you need to make sure that they're actually set up as an employee. So are you paying them through payroll? Do they have an account set up in their name that's getting paid through the business? And making sure all of these things are happening the right way. So it's not just about, I have 3 kids and I'm going to find a way to pay them so that I can get this deduction. That's not what it's about. You always want to make sure that your deductions, and what I tell people is reasonable and necessary. So is it reasonable for you for your line of business and what you're doing? And is it necessary for you to incur this expense for you to run your business, for you to actually make a profit? Is this an expense that you actually need to incur? So if you can answer those two, your expense is probably justifiable. But if you can't, it's probably not justifiable.
Yeah.
And you risk getting audited, and you risk those expenses being added back. And what the outcome of that is if you put them as a deduction and then you get that benefit, so your taxes get reduced because you have that deduction. If you get reassessed and it has to now be included as income, you're going to now have to pay taxes on that difference, and the penalties and interest are going to be there.
Yes.
And that's what people don't realize. It's not just about them saying, no, you're not getting that $10,000 deduction. That is now going to be considered income that you now have to pay taxes on. And so, yeah, you definitely want to be careful with the hiring of the children.
Okay. All right. I know I jumped ahead. I just had to throw that out there because this is like some of the random stuff that I get emailed to me, even though I say I'm like, I don't do I don't do any of that, but that's one of the things that I get. So I know you talked about commingling funds.
Mm-hmm.
That kind of goes into a lot of other mistakes that you see. You kind of want to share a little bit more about that?
Yeah. So another issue that I see a lot of people have is that, because we were talking about deductions, is they want to overflow the business with all of these deductions. So they're basically over deducting everything. And granted that it might be valid deductions for the business. So now we're not on the side of, is it a valid deduction? Now we're talking about over deducting things. And so a lot of people need to realize that what deductions mean. So yes, it's going to mean that it's a deduction. So your income is going to be reduced and you're going to pay less taxes. But on the face of that financial statement, now that you're no longer a W-2 employee, your business is now what your livelihood is. And so if you're now going to use your business and say, this is what I do, this is what I bring to the table. And if your business is showing a loss or very little income because you've over deducted, that's basically saying that you probably don't have a viable business. And so if you want to leverage other people's money, if you're going for a mortgage and they need to use your business as your source, how viable are you? Can you pay us back? You have to realize that over deducting is going to be an issue. So I think that's another thing that people, they just want to overflow these deductions, but they don't really understand what that means on the other side.
Okay. I'm not surprised.
Yep.
I'm not surprised for hearing that. And I always joke and say over deducting is not a tax strategy. That is not a tax strategy. You don't wait and say, oh my goodness, I'm gonna have all this income. Let's find a million things to just say, is it a valid business deduction? I know that that's tax planning and tax strategy is completely different from tax preparation.
Yes.
Do you when you do consultations with people with over deducting, I guess, what are some things that could come if you're not, say you have all this income, right? And you're not paying anything throughout the year. Like what are some of those mishaps that happen, or maybe that you've seen from working with someone?
Yeah, so that brings me to I don't know what number we're on, but that brings me to my next thing that people aren't doing is not tracking. So coming under organization is tracking. So many times I'd see people like, no longer are the days where people are keeping shoe boxes full of receipts. Now everything is digital. Now people don't get receipts. They pay for things online. So it kind of slips their mind and they think that they can go back after and figure out everything that they spent. But so many times clients come and they're like, well, I know I spent more. So they made $100,000 and they're like, yeah, but I spent a lot of my money. But where? Because you don't have the receipts. You didn't save anything. You weren't tracking anything. People need to realize that the government's onus is to figure out what you earned, and because they want to tax you on that. But it's on you to have your deductions and to have the proof of your deductions so that you can apply it to that income to reduce your tax liability. So the government's only going to be concerned about that $100,000 that you made because they can tax you on that $100,000. But if you're saying, well, I made $100,000, but my expenses, my overhead all of that came to 60,000, but you don't have receipts, you don't have proof of that because, you let it slide as it went by. People think that they can always go back, but you don't remember. I don't remember what I did, like all the expenses I used last week. If I wasn't tracking them in my budget, I'm not going to remember. So I'm not going to remember 52 weeks from now. And so that's another thing, tracking, like making sure you have a system that's able to track your expenses as well as your income so that you know where you stand. You understand what's coming in versus what's going out so you can make adjustments as needed. And this goes with your personal finances as well. As I know that you talk about that a lot, but it's the same thing with your business. You need to basically know what's coming in and know what's going out in order to know, are you profitable? Does something need to change? So that's another mistake that a lot of people make. And yeah, so that falls under the organization again.
So we have organization. And so if you're tuning in, make sure you're tagging an entrepreneur and you're sharing this, right? So because that towards the end, I'm going to open it up for Q&A, and you can ask Atiya whatever tax question you have. It probably will turn into her saying you need to do a consult, but shoot your shot, okay? You have her on. So they definitely tag entrepreneurs as and people don't think about real estate investors as being entrepreneurs. They're like,
but they definitely are.
If you know someone who's investing in real estate, tag them in this video too, so they may have some questions for Atiya, because that is the specialty of one of the main areas for the savvy accountant. So, organization, commingling funds. I threw in the tax deduction, the children employees. You just mentioned the importance of tracking. So I added in number 4. So what is your fourth item? Because I made up number 4. So we're gonna do A right here.
Yeah. So my next one is actually not being prepared for tax time. So many clients come to me, potential clients come to me, and they had a great year, but because they weren't tracking, they were spending because, money was coming in. So they were able to buy things, they were able to invest in the business. But your tax bill is going to come and the tax bill is going to be due, and they don't have the cash on hand to actually pay their tax bill. So I like to tell people to always be prepared for taxes because it comes around every year. It's always there, but so many people aren't prepared for it. And that's what I think causes the apprehension with taxes a lot of the time, is that they're fearful. So I tell people to save for your tax bill. So all the income that comes in, save a percentage of it in a separate account that you can't touch, that's going to be there only for your tax bill when it comes due, so that you have the cash on hand to pay that bill, so that you're prepared. So many people, when it comes to taxes and all the stress, it's because they have a bill and they don't know how to pay it. And that's what I see a lot when I work with the clients that I work with, because the real estate industry is so seasonal, and you can have a great commission season and then it goes down, but your bills don't change. So you are using that great commission part to pay your bills as you haven't sold a property recently or something. And then the tax bill comes and now you don't have the cash on hand to pay for it. So I'd like to tell all my clients to always have a separate account for your taxes, so that you can put 30% or whatever percent your tax professional tells you they expect you to be paying, and put that aside. And so I notice a lot of people don't do that.
I know if they're not working with a tax professional, because I think business owners, they don't, not all, but some, especially new starting out, they don't see the value in hiring a bookkeeper or a CPA. And if you have high revenue, you definitely want to work with a CPA to do actual tax planning, because when I intro Atiya, that $250,000 in tax savings, that person paid whatever fee she was charging to get to that point. So you have to be able to invest. If you are blessed enough to have a very profitable company, you should and must be doing tax planning, because the taxes, setting aside that amount to know what you're going to have to pay at the end of the year, is so important. Do you have any software that can assist with being able to gauge it? If someone's like, I'm not there yet, right? Of being able to have a CPA on hand, but something that can like gauge what amount they should put aside.
So I tell people to put aside 30%. And that's typically because a lot of the clients that come to me, they're single member LLCs. And so single member LLC, that means it's going to be a pass through to your personal return. And a lot of the times they come to me because they're new small business owners. So they still have their W-2. So their tax bracket, they're not sure where the income is going to come and where it's going to put them on their tax bracket. So 30% is something that I always like. It's just my magical rule of 30. And, you know, if it's less than that, then that's good.
Right? It's more money for you. It's more
exactly.
money. Exactly.
But 30% is what I tell people.
Okay. So the being prepared to pay the tax bill is important, because going back to I think it was point 3, as far as being tracking or whatever, if you are not a W-2, you don't have any W-2 wages, then your business is your lifeline, right? And you want to show profits. You don't want to just be like, I'm breaking even every point and not knowing. And a lot of times you could be doing that, or a business owner that probably could be doing that. It's because they have this fear of like, I know I don't have enough money saved to pay any taxes.
Pay the taxes.
So I think that's a good rule of thumb is 30% to put aside of what you're getting in your income per month, quarterly, but you don't wait to December to say it's away, because it's not too late, but it's just going to make things stressful.
Exactly.
If before I let you go to the last point, what is the worst time to say I need to hire an accountant? Like, when you think about, I know it depends on their fiscal year, but just say they have a calendar year and they're like, I'm nervous about this. When is your do you have a cutoff when you're like, okay, this, I can do this for you, but you're not going to really get that many advantages because I haven't been working with you all year? Is there any cutoff? Do you see?
Yeah. So that sounds like the distinction between tax strategy and tax prep. So many people think that their tax preparer is actually doing strategy for them. When you think about what they actually do, it's kind of impossible. So your tax preparer kind of sees you in that February, March time period when you have the April deadline. So the year has passed and closed, and we're technically in a new year. So they're really just taking your picture as it comes to them that the year has been closed, and they're basically making you compliant. So they're going to file your tax return, the correct tax return, make sure it's accurate, and they file it timely. And that's what their purpose is. It's really difficult to implement any strategy, to implement anything that's going to save you on your taxes when the year is already closed. So a lot of people mistake tax strategy, and they think that it's the same thing as tax compliance or tax prep, where it's not. And so the cutoff is really before the end of the year. If you want some tax strategies to get implemented, you have to do it before the year is over, or else it's really not going to be able to benefit you. We can start it for the following year, and that's something that could be done. But if you're looking for something to be done on your current taxes, it's not something that you can wait until February, March to get done. Because when you literally conceptually look at it, your taxes are due in April, but the year had closed for 4 months before that. So
and that is exactly why, like, I've considered doing like volunteering to do like accounting aid society and doing tax preparation for low income. But when you're a high income earner, and even if you're not a business or even you're a high income earner, you should be doing tax planning. And I've had people like say, can you look at my taxes? I need to file. I'm looking for a new accountant. And I'm like, I don't want to even, first of all, I don't do taxes, right? I could do them, but I just don't want to. But let's say that I did this and I just side hustling, not advertising it. But for me, I don't want to do it if I didn't do any tax strategy with you, because you're going to be upset with me because you don't have these savings. And I thought
when I tell you, you're going to be like, what? I'm like, that's what the numbers say.
I know, and it's like then I don't want to hear. And this is me ad-libbing from colleagues of mine who do this, and then they're like, "I work with this person." Well, it's like, well, this is what I have on paper for you. The year is done. There's nothing that you or I could go back and do. So we can do tax
Exactly.
planning for the upcoming year. And I do tell that I do. I always give that tip to hairstylists. I feel like they will ask me to do their taxes or what should they consider, how should they do different things. I'm like, you need to have someone that's planning for you shouldn't be planning to write all this off because you have all this income coming in, right?
Yeah.
And I'm always saying tax strategy. So there's a huge difference. So I'm gonna let you get to point number 5 if I didn't already jump in and ask it already, but
But we kind of touched on it. So my 5th point is always not working with a trusted professional. So a lot of times people, and I am all for DIYs. A lot of my packages start off with a DIY option where we kind of are consulting and helping you through it because if you're a DIYer and you want to do it on your own, that's fine. But my thing is a lot of like, well, we're in a time right now where so many things are changing. Like, not only is coronavirus here and people are losing jobs, people are losing work, there's stimulus packages coming in, there's unemployment, all of that. On top of that, there was a tax reform that happened the first time in, I don't know, 40 years. We had a whole tax overhaul. So there's a lot of changes happening. And if you are not privy to all the changes, if you're not keeping current, even if you did your own taxes and everything was hunky-dory and everything worked out, there's so many changes that you want to make sure you're speaking to somebody who is up to date on those changes, because you're just going to screw yourself over if you're missing something and it could benefit you. So my 5th, I guess, point is work with a trusted professional. Even if they're not going to end up like being your trusted professional for the whole year, or you're not going to keep them on retainer, still meet with them and let them see your situation and let them talk to you about what you should be looking out for, how they can help you, and still use their knowledge, because I know Google is free and everybody talks about, but I went to school for my degree. I studied my butt off to take these exams. Like, this is serious stuff. And I know a lot of people don't like taxes, but I do love taxes. Like, I love the fact that it's like a puzzle and the fact that it's different for everybody. So I can give a tax strategy to 3 people and it's going to look different for all 3 of them just because of the way their situation is, the way their entity is set up. So to me, that's interesting. And everybody is not built the same way. So you want to get somebody who's going to find that stuff interesting so that they can help you.
I love that point. Especially like you said, years. Not even that you taking the exam, but like the years of experience that you have, right, with doing it. And I think for me, I'm getting to the point where I'm like, I'm done doing my own taxes. So for me, I'm like, why I say I know what to do is because we have to take continuing education every year.
Yep.
And I'm still like the CPE that I take. I will throw taxes in there just because I'm doing my own taxes, right? But you want to have someone who's doing that, right? That due diligence and staying up to date with it. And it's like, I do it for myself, but if you're in this certain industry, I'm not trying to see what's going on in that industry that could be for you. Like, you know what I mean? So so if you have questions, if you're tuning in, drop them in so we can address them because we're going to be wrapping up shortly. So if you have any questions, drop them in as it relates to taxes and business taxes. But so while we're waiting for some questions or comments to drop in, I want to know a little bit of the story about the $250,000 tax savings, because that's a huge one. Obviously, I'm not saying walk through step by step, but just a high level, like, how long were you working with this client? Just how did this come to be? That's a huge
So, and I tell people all the time, like, I know taxes are like, it's like a topic that's taboo and people hate taxes and stuff. But when you like break it down on what it is, I don't think taxes are that bad. And there's actually a tax code written to help you save on your taxes. So once you know that, then it's actually not that bad at all. So you can actually use this tax code to help reduce your taxes legally. So tax evasion and it's not the same thing as when you're trying to avoid paying taxes, lie to the government, hide money. That's completely different. That's illegal. People go to prison for tax evasion. Okay. So we're not talking about
Yeah.
evading your taxes. But so with that client, definitely she had a crazy year, right? And so she had a huge amount of growth. It was a huge blessing. So we were able to look for real strategies. So one of the first things that I do with all of my clients when we're talking strategy is looking at your entity structure and making sure that you're in the right entity structure for your business, for your income level, for what your company is actually doing. So many people, when you start out, you're going to probably start out as an LLC, because the main reason to get an LLC is to shelter your personal assets from the business. So God forbid something happens, your personal assets are protected. So, if you have a family, a home, and all of that stuff, you don't want somebody to be able to sue you because they say that they got sick off of a cake that you made, and be able to take your whole house, to take your retirement account, to take your husband's retirement account. You want to make sure that these things are protected. And so setting up a separate entity from yourself is one of the first steps you want to do when you're starting a small business, so that you're protected. But there are other ways that you can actually protect yourself, other entity structures. So you want to see which one is the best one for you, because they're all going to have different tax implications. They're all going to be taxed differently, and it's going to be different how it's going to be taxed to you personally. If the business is going to pay the taxes, are you going to pay the taxes? So entity structure is going to be the first thing that we looked at, that I look at when I'm doing a tax strategy. And so we were able to change the entity structure for this client. And on top of the entity structure change, we looked into retirement options. And a lot of people don't realize that when you have your own small business, your retirement options kind of expand. So you're not limited to the 19,000 that you're limited to with your typical 401ks through your W-2 employment. So that was an option. And my client was really big on donations and being very charitable. So we were able to take advantage of a charitable trust. And so that was a big deal, as a big deduction for that client. So because they had such a stellar year, they were able to give a lot more. And, God says you give more and you get more. And so since she's been giving, she's been getting.
Clearly.
Yeah. And so yeah, it was a really big deal. And she was
No,
happy. I was happy.
who wouldn't be happy off of that? That's a $250,000 tax savings, and that's all going back again to tax strategy.
Yeah.
It's so important. And I mentioned last week, because I did like a part one to business, business mistakes and some tips and strategies, and the entity. And I talked about the S corp election. What makes sense for you and your business, to get the most out of your savings and taxes. And like you said, like the charitable trust, like these things, you're going to be Googling and YouTubing to death to try to figure, like, to put this puzzle together, right? Like you said, it's so many different pieces. You don't know what you don't know. So
Exactly.
it's so important to hire a professional. So again, if you have any questions, drop them in. If you do not, I'm gonna close out with my final question if I don't see any questions pop up. So what tips do you give people who are looking for a professional, a financial professional to work with? What are some things that they should be asking or looking for?
So I know with the whole social media craze, it's really important to look for a professional that's in your industry, who knows your industry, so they can actually figure out things that are intricate to your specific industry. I know with real estate, a lot of people don't realize that depending on the strategy that you're going into with your real estate investing, it's going to have different tax implications. Your flipper is not going to be the same as your buy and hold, as your wholesaler. So it's not just being in real estate and you think it's going to be one tax situation for you. That's not how it works. So knowing somebody who understands that it's going to be different tax treatments, that's something. So speaking to somebody who knows your industry, not necessarily that they have to be a specialist, but you want to make sure that they've worked with people in your industry. You want to make sure that they communicate the way you communicate. We are in a world, especially right now with Corona, that you probably can't meet in person as you might want to. Are you able to meet with this person virtually? Do they communicate the way that you do? So communication is a big thing. Obviously, credentials. I think looking at a person's credentials are important, because not everybody can help you in every situation. So there's only technically 3 professions that can help you in front of a representation if you have a tax issue and you have to go to court over your tax issues. So you're going to need a lawyer, you're going to need a CPA, or you're going to need an EA. So those are going to be the only 3 people that can help you in that situation. So you need to make sure that they're actually credentialed to do that, because if you want them to represent you, they have to fit one of those criterias. So yeah, and it's just got to be somebody that you connect with. I like to call the people that I work with my savvy family, because like I said, I take my oldest role really seriously, and I think I put that over the people that I work with. I cover them and I work with them the way that I would with my siblings. I want to make sure that everything that I would recommend to my sister is something that I'm going to recommend to you. I work with integrity. I try to always do that. And I think that you need to work with people like that. I have had to turn clients away because they wanted to do stuff. And I was like, well, that's not how that's done. And so I've said to them, so do you want me to commit fraud on your behalf? Is that what you're asking me to do? Just because I want to be clear. Is that what you meant by that? Because that's what that is.
And you're like, I'm not losing my certifications.
I'm not about to lose my title for you. It's just not going to happen. So
it's not happening.
Yeah, it's not happening.
So we got a question from Jamal Watkins. Okay. We kind of touched on this a little bit earlier, but is it smart to hire your kids?
So it's very smart to hire your kids. For multiple reasons. So we talked about deductions, reasonable and necessary. So if it's a valid deduction, it's going to reduce your tax liability automatically because it's going to be a deduction for your business. But on the flip side, let's talk about the non-monetary things that you're going to be teaching your children. You're going to be teaching your children how to hold a job, how to be responsible. They're actually going to be working on their legacy with you. That's, to me, that's an amazing thing. Like it's crazy because my daughter had a career day last year and she dressed up. She had a blazer and I'm like, what are you going to be? She's like, I'm going to be an accountant like you. And I was like, oh. I was like, oh. And so she helps with stuff and she enjoys it. Like she loves telling people, yeah, my mom's a CPA. She's going to help you. She can help you with your taxes. Like they see that and they have that sense of pride. I think it's amazing to hire your children. You just need to make sure you do it the right way.
Yeah, and I would say, Jamal, too, Atiya mentioned earlier, like if you're going to hire your kids, make sure you actually have they have roles and responsibilities, not doing home chores, not making a bed. You actually have a role. So think about social media, depending on what your business is. If you're in real estate, maybe they can sweep up the floors, but you want to have roles and responsibilities in I'm going to say reasonable salary. I know it's probably another term.
I know, yeah.
You shouldn't be paying, and I'm not saying you're doing this, Jamal, but I'm saying this out of all the different stories that I've heard, that you can't pay your child $50 an hour as a social media person that is making $25 an hour. That's the average wage of it. You can't just increase it.
It definitely has to be reasonable.
Yeah. So as long as you have the roles and responsibilities for your children, tweens or teens, yes, hire your kids, but you definitely want to have those roles and responsibilities laid out, what their wage is going to be. Obviously, there's labor law, so see how much that child could be working per week or whatever, and go from there. So, well, thank you for coming on, Atiya. I don't have any more questions.
No problem.
So where can people find you and how can they work with you?
So I'm the Savvy Accountant across social media. So they can search me Facebook or Instagram as the Savvy Accountant. The website is thesavvyaccountant.co. And so they can reach out. They can book a consultation directly from the website or directly from the link in my bio on social media. And
Yep, and I just put that in the comment section so you all can work with Atiya, book a consult, book a strategy session. She knows her stuff. So again, thank you, Atiya, and
Thank you for having me.
Oh, you're welcome. I'll see you all next week. Bye.